I
Hello,
can't tell.
hello.
You sound super loud,
That's
but that's
good.
good because, I mean, makes it easier, for me to hear you talk over me.
Just the way I like it.
Just the way it's supposed to be. This episode of the Under the Table podcast is brought to you by Shrubs.me, your all in one digital hub. Share files, links, videos, and more from one beautiful customizable page. Picture a cross between Dropbox, Linktree, and Patreon. Get your free account with 2.5 gigabytes of cloud storage today at Shrubs.me.
Did you see the result with the vote at council for the sixplexes?
Yeah, I did. Is
Yeah.
that what, is that the big news? Oh gosh, what a waste of time this whole fucking thing is right now. Six
Well, we
plexes.
talked
Okay,
about it before.
let's go. Six plexes to save the day, right? Perfect
We
timing.
built
Let's go.
zero sixplexes in the last 6 months,
The
but this
pilot
pilot
project.
project was a success.
Yeah. Hell,
So,
so let me ask you, counselor, in the pilot project, exactly how many houses got built and are current?
sixplexes.
Yeah, right.
Or even
What
completed
difference
yet.
does it
Hold on,
make?
hold on. You know where we should put them? We should put them in the areas where the lots are too small to actually fit a sixplex. Why
Oh,
don't we do that? Because the areas where the
and
sixplexes will fit, well, that doesn't make sense.
no, and on top of it, we're going to limit the depth of the building on top of it. So, like,
Yeah,
if you do have a narrow lot, but it's deep, you can't do
you,
anything.
you
It
still
doesn't
can't do it.
matter.
So
Go fuck
really,
yourself.
in none of the areas that we're going to allow sixplexes, anybody will either want to build them or can build them. But this is how we're going to get housing.
This is how things are going to go. But TK, before we get into this, because this is an important topic, we have like probably the
If you say the biggest, like everybody's the biggest guest
this
to
guy
you,
is the
you get everybody so
biggest.
excited.
He's the
You know what I
best.
mean? He is a
Everybody
great
knows him.
guest. He's
He's
a
a
great
great guest.
guest. He's a
I
great
listen.
guest.
We should be proud to have him because
I'm proud to
I don't.
be
I'm surprised.
anywhere near Darryl Frankfort. But
Well, not what. Listen, TK.
yeah,
I don't know
Daryl,
what that's all about,
Daryl,
but Ben
Daryl.
Rabideau, okay, like of all the people on earth to join our show, this is a true professional. This guy has, something to lose coming on this show, right?
Absolutely.
It's great. It's great. We've made it, TK. We've made it. I mean, so other people, they avoid us. Nobody really wants to be on the show, do they?
I don't
Look,
know. We don't really invite anybody, so that's probably a good start. But I think we
this,
got to also pick people who are, suitable for our genre. Like you can't
well,
just bring on any old guy on the show. I mean,
you
what
know,
are what are the listeners going to think?
well, Ben was instrumental in that fortress thing, and so when that whole thing kind of broke and the case became public again, or people started talking about it again, I reached out, and this time
Yeah.
he actually said yes. So I'm really excited about that. People got to stick around. Don't forget to sub to the channel because nobody does that anymore. TK, we're very stagnant
We've
here.
noticed that people are
We're very
people are even
stagnant.
leaving. Where are you going?
Where are you going?
What
What
are
the
the
hell?
channels are you following and subscribing to?
What do we do? What
Right?
did we do? But anyways, this is gonna be a banger. I think we gotta see what he has to say because he has some
Well,
good
let's get him on then.
knowledge.
Let's get him on. Let's get him on
Well, is he ready to
because he's
come
got
on? Not yet. We're
not
not
yet.
ready
Okay.
for him yet, but
All right.
he'll be here soon.
Well,
But
we got
TK,
issues. Then I'll
so
do my little TK
six
on the.
plexes.
I'll do
You
my little TK on the ground, boots on the ground.
is
Let's do that.
nothing to do with six plexes anymore. You don't want to
We'll
finish
talk
that?
with Ben about that
I
because I'm
don't
sure
think
he'll
he
have.
gives a shit about that. But okay, yeah, we could try that.
Does anybody?
Does anybody? That's the
Right?
thing, right?
Does it make sense? Can you make money?
This episode of the Under the Table podcast is brought to you by Shrubs.me, your all in one digital hub. Share files, links, videos, and more from one beautiful customizable page. Picture a cross between Dropbox, Linktree, and Patreon. Get your free account with 2.5 gigabytes of cloud storage today at Shrubs.me. I have a great story from this morning when you're finished your boots on the ground.
No, you know what, Daryl? You tell your story
No,
first.
it's not as
See
good
how I
as
am?
yours. Nobody,
See how I
nobody
am?
cares. Mine is not time sensitive, right? Yours is like
Yeah.
right there in the action, in the trenches, the
Yeah.
daily stuff, right? That's the
All
most
right.
important stuff.
Well, here's what I'm gonna give everybody an update on. All right.
You tell
Offer
us.
dates.
Offer
Offer
dates.
dates are back.
They're back. How long were they
Okay.
gone for?
Hold on. This is an important topic. The offer date is back.
Back.
But
But
this time it's different.
oh,
This time it's different. On offer night,
yeah.
you don't get any offers.
Oh, that's the best fucking part.
But
Oh
the date
no.
is still there.
It's
The
still
date
there.
is still there. You just don't get any offers. So it's different. It's the same, but it's different.
Is this because of horrible offerings, or is this because
No, it's
everybody's
even
just
better. It's
waiting?
even better. Okay. It's even
What?
better because
How?
the property
Yeah.
isn't worth the price that you're offering it for.
Right. Well,
And so the
this is
sellers are like, man, I'm going to drop it really low and price it so low that there's going to be a lineup of people. The agents are like, I think this might be enough to get a bidding war going on. The offer dates are going to be put onto the MLS listing to say no offers until. But on offer date, everyone's going to look around and say, that's an okay deal, I guess. Like
okay, I
I'll still
guess.
probably want to negotiate from there if my client's interested after we see the 8 other properties that I got booked for them next weekend, right?
Yeah, like let us know how you do on Tuesday.
Yeah, but that's what it is. So I had one. I had a call. I have a condo sold conditional right now. Knock on wood. And I had my offer date. I swear it was a good number. I thought it was a great number.
Yeah.
People should be lining up for this condo, but it turns out it wasn't such a great number.
Condo.
But we got it sold conditionally, so we're waiting on that one there.
At a bad number?
It's at the number. I think they did well, and I
The
think
number.
they're losing money from when they bought it a couple of years ago, but it's it's the number. It's the right number.
Gets it off the
least,
books.
At least it's going to be sold. They want to transition to freehold, so now they're going to go from a condo, which is going nowhere, that the prices will probably continue to go down, into
Yeah.
a freehold. Maybe prices will go down a little bit, but over 10 years, how much more money will they make in that freehold than hanging on to that, condo that's just, oversaturated, right?
So hold on a sec. So they're cutting bait on the condo
Condo market, even though it's a loss,
even though
they
it's a loss,
yeah.
in order to get into the next rung on the ladder, because
They understand.
they
They
have a
understand that
kid
no
or
matter
something.
what.
They have a kid.
No, it's a single
Right?
young guy. Single young guy.
Single young guy just wants to
Yep.
move up and take a
Just
loss.
doesn't want to be stuck in this condo market and be, just
That
living in a
sounds-
place he's unhappy just because he's going to lose money. So we got the emotion out.
Yeah, yeah.
No more emotion.
No more emotion. Don't
Yes,
worry
my
about the
equity
money.
is no longer where
Yes.
it was, but I will
Equity.
be in a property that I'm happy in, and my equity will grow over time because it's going to be a better investment long term. It's the right advice. He must have a good agent.
Must be
Yeah.
brilliant.
It's not me. Obviously, it's not me. This is just an
Clearly.
example. I read this on Reddit.
Clearly.
Yeah. But if you
So-
do want to talk to me, there is a link in the bottom for you to book a 15-minute call with me. So
That's
just
true.
so you guys know, it may not always be there every episode, but it will be there this episode. So check it out if you want to get any advice from me, or you just want to tell me how bad my advice is. I'm happy to listen.
Generally, there's a way to find through the description.
Most people
in the
find
link
me.
below.
Yeah, most
They
people
find
find
you
me.
if they want you.
So far to date.
Pretty
I don't know about anybody who's still looking for me. That's all I can say.
That's right. Well, you don't know if they've continued looking, right? Like,
I don't know about
and
it. I
how
don't know
hard
about
are
it.
they looking, really? If right, I mean,
Yeah.
is it? Anyways, so TK, I had the pleasure this morning of going to this lovely golf course for breakfast with these other developers out there, and it was a pretty cool experience. Everybody was sharing their knowledge and sharing their experience, and it's an interesting time out there. I'll tell you. But if these guys are all active right now, which is really interesting. Like everybody's kind of pursuing deals in that room at the moment. Not me. I'm knee deep in everything that I've got. Yeah.
Your schedule's
right now,
full.
Well, and so when you were saying earlier that, the equity may not be in the same place as it was before, which it's unfortunate, but everybody in that room had one thing in common, and they were all looking for that equity, man. Right. So it's a pretty important thing, depending on, I don't know what perspective you could have where it's not the most important thing, but I'll tell you, everybody in that room could use more equity.
More
all
equity
the time.
would help them. Speaking about
All
equity,
the time.
I got those guys' contacts from me yesterday. Who
yeah.
I've known one of them for a long time, and I know the company. So
They're
I know
not good
it's
for
a
equity.
good company.
They're good for
No,
debt. They're good
I know,
for debt.
but
Yeah.
so I have someone who needs debt,
That's
and he was in a situation without saying too much. He got screwed on one site. His other site that's going really well, his financing got pulled. because of what happened on his other site.
That
So he
doesn't
came to
sound
me
like
for a
it's
real
going so
estate
well.
solution, and I was like, I don't have a real estate solution for you. I got a debt solution for you because the debt that he lost was from the bank, and it was
Mhm.
cheap debt in with all things being considered. So I said, I'm going to refer you to less cheap debt,
Less cheap
but
debt.
it's going
Yes.
to be what actually solves your problem here.
It
So
might be
I
there.
sent him that way, and
Yeah.
it's a big construction loan. You're talking about 100 freeholds.
Well, that's cool.
Yeah, so it's a big
Those
construction
guys
loan for
can
those
get it
guys.
done. Those
Yeah,
guys can get it
I know
done.
they
That's
can.
for
I know.
sure.
You're not subscribed? You're watching this channel, you're not. What are you doing? What are you doing? Hit the subscribe button. Ah!
Well, speaking of guys who can get it done, this guy Ben Rabideau, we are thankful to have Ben join us on the show. Good to meet you, sir. Welcome.
Welcome.
Hey guys, how are you?
We are doing
Fantastic.
fantastic. Happy to have you. I'm sure our whole audience knows you. I mean, I think everybody should know you already, but like, can you just give us a little nugget into who Ben is?
Sure. Ben Rabideau. I run two research firms, one that caters to institutional investors, so big pools of capital, U.S., Canada, and around the world. That's North Cove Advisors, and then I've got a second research firm that works with anyone who's sort of tangentially related to the real estate space here in Canada, be that realtors, mortgage agents, brokers, developers, anyone that's kind of loosely affiliated with the real estate market and that appreciates that kind of institutional quality research.
Awesome.
Yeah, he's
Well,
made
welcome
a
to
big
the
name
show.
on Twitter or X for himself. He's in the big boy club. He has
We've quoted you before on the show.
oh my god,
So maybe
That's great.
that's the connection maybe people will have. So there is a little bit of legitimacy, because you hear something from me or Darryl, well, Ben Rabideau said, and that's how, relationships are built out there, right? So make sure you start off on the right foot.
So
For sure.
we've played our little part in nabbing some bad guys and some fraud on this show, funny enough. And of course, you sunk your teeth pretty deep into that fortress thing, and this is kind of where having you on the show kind of came about, because I think that's when I reached out to you when that was back in the news again. And so maybe you want to kind of just discuss that a little bit. Like, why were you so involved in that?
Sure. And by the way, I'd love to hear your story. You sound like you guys have done some interesting work as well. If you're kind of there working hard to bust fraud. As it relates to Fortress specifically, part of my kind of process for covering Canadian real estate is I use a kind of top level macro analysis. And I think the macro data, the macro research is good on its own. But then what I do is I speak to a lot of folks in the industry and just kind of get a sense of what people are seeing and try to overlay the intel, the anecdotes with the official data. And as part of that process, I was speaking, this is going back to 2013, speaking to folks in the mortgage space. And just saying, hey, what are you guys seeing? What's interesting? What's happening out there? And just started hearing a lot of this, like, hey, man, do you know anything about these Fortress guys? Like, they're coming into our office. They're telling us they'll give us 8% if we raise money for them. I'm like, what? So right away, it's like, how are they paying you 8%? Like, that's a crazy finder's fee or referral fee for capital. And then so started doing some pretty cursory research on them. Very quickly stumbled across some ads that struck me as being really at best misleading, using a lot of words like safe and secure and this sort of crap, guaranteed in some cases. And for your listeners, like a high level synopsis of what this company was is they would raise money from mom and pop investors, let's call it relatively unsophisticated investors, ostensibly to fund the soft costs and development projects. So soft costs would be things like paying to have the land rezoned, hiring a sales staff, trying to hit your sales targets, et cetera. And so, but as part of that kind of pitch to the investors, they would say things like, listen, this is a really safe investment. This is a secured investment. If anything goes wrong, we sell the land, we get you your money back. No one's ever lost any money, like all this sort of stuff. And what wasn't being disclosed, and what I started realizing pretty early on, just from pulling some land registry documents and just kind of perusing some court records that had surfaced fairly early in the timeline, was that they were not disclosing that they were overstating the value of the land dramatically. right? So we could see this. Like I would pull land registry documents. You'd see they bought a parcel of land for $10 million, closed on it. The next day registered $40 million of liens against it. But yet they're representing to their investors, oh, this is a really safe loan because we're only lending 70% of the value of the land. You're like, well, that's bullshit. Like clearly that's bullshit. So, and what would ultimately happen is if the development went sideways, the collateral backing it was the land itself. And in some cases, by the way, in some cases they were in like second, third, fourth position behind other lenders. So you'd have like a first position lender up to like 7 million on that $10 million parcel, a second lender for the next two, and then these guys were on for 30 million after that. So like there was no equity at all for their investors. So you started seeing stuff like this. I mean, we could go on and on. There's a lot of facets of this fraud. There was a lot of fees that weren't being disclosed in some of those court documents. We could see that they were taking 30% off the top as fees, which was not being. If you told the average investor, "Hey, give us $1,000, and by the way, we're going to take 300 off the top as a fee," most people would be like, "Hell no!" Right? So there's a lot of stuff like this. It had a number of facets to it. They were representing that they were giving independent legal advice, but it turned out that they were paying this lawyer who was like, "Oh yeah, this is a really suitable deal for you," and all this other bullshit. So basically, I started kind of warning about that on Twitter. It was Twitter back in the day, and just raising some basic questions like, how are you guys representing this as being a safe investment that pays 8% yield annually in a zero rate world? That doesn't make sense. And then started getting threatening legal letters. Kind of went through this back and forth where I would post something, they'd threaten to sue me, I'd take it down. A little while ago, time would pass, I'd post something else, they threatened to sue me. It was kind of this dance back and forth. And finally, after a while, I'm just like, you know what, fuck these guys. If they're going to sue me, they're going to sue me. So they did. They alleged defamation. This was back in 2015 now. And went in front of the courts. We countered with a slap legislation, which we alleged that this was a strategic lawsuit to try to silence me, basically. And the courts ultimately favored me. The decision was very scathing towards their lawyers, basically being like, this is a bullshit lawsuit. Why would you ever bring this? And so that was that. And so, but during that process of being sued by them, it just kind of pissed me off, and it gave me the impetus to sit down, compile all the research I had done. And one thing I'm fairly good at is taking complex topics and really boiling it down. And so I did that, turned it over to someone at the RCMP who I had been in touch with. And that ultimately formed the basis for some of the charges against them. That report that I turned over to the RCMP is actually linked on my Twitter profile. It's one of my pinned tweets. So anybody who wants to see exactly what I turned over, how blatant, how obvious the fraud was, it's all there. But unfortunately, these guys had already raised over $900 million, $400 million in crystallized losses to date. And there's still more that are kind of working their way through the restructuring process. So there'll be more losses. Just devastating shit. And unfortunately, completely avoidable had the regulators not just completely screwed up on it.
Were they like targeting accredited investors? Were they like, what was going on there?
Nope, not accredited. So what they were doing is raising. So because it was a bit of a loophole. So, I mean, they were raising funds primarily through the mortgage channel. And so you have much different rules around how you can raise funds there. They were not. See, the one thing you got to realize, and again, this gets back to like one of the multitude of red flags involved. But the two main founders, both had been sanctioned by the OSC for their role in a pump and dump scheme, like a really brutal pump and dump scheme that cost people a lot of money. They were explicitly involved in that. And then the one guy, Jawad, was banned for life from the Mutual Fund Dealers Association for a separate infraction. So these guys had like a long history of screwing over investors and causing damage, but yet somehow were able to kind of skirt some regulations and raise capital
the securities requirements. Yeah,
right. So it definitely was not accredited investors. These were largely unsophisticated investors raised through kind of a network of mortgage brokers. And then as it progressed, they ultimately managed to partner with some, I would say, unsuspecting, less sophisticated financial planners, and were able to start paying them referral fees for funds from their clients. So that's how they got to almost $1 billion raised.
That's insane. And it was the perfect storm, right? Because obviously the market conditions, right? And if they've been doing this, like you said, since 2013, there probably was some success. Did they, they had sites that they built? They had, what was their
There were some that were completed.
Yeah, like
Yeah, it's a good question. So, I mean, there were some that were completed. I couldn't tell you percentage wise. I could tell you, I mean, in terms of percentage of the funds raised, it's almost half is gone. And we have not crystallized the final ones. They're still kind of working their way through. So, I mean, I think as a reasonable ballpark, you're probably looking at, 400 to $500 million in crystallized losses. So half of the money gone.
And so the market made them look like geniuses probably on the first couple deals where they kind of made sense somewhat, where
right.
they were able to get it built.
That's true. I don't even know if that's
But
true.
if the market was like now, nothing would have been built, right? So it's like they got,
yeah, 100%. Yeah. No,
Yeah.
you're right. They kind of caught a wave of, like, it kind of worked perfectly because you remember, like, after the financial crisis, rates went to zero. If you were an income-oriented investor, it was really hard to find yield. And these guys show up promising yield that happens to be backed by real estate. Everyone knows you never lose money in real estate in Canada. So you're right. It was kind of this perfect storm. But I will say that one of the things that I found quite alarming early on in pulling some of their investor documents, because one of the things when you put things out on Twitter, people will reach out to you. People are like, hey, I saw your tweet. I actually have invested with these guys. Here's the documents I signed. And so, like, I was actually getting a look at some of this stuff. One of the things that blew my mind was in one of their projects, which happened to be the one in Winnipeg, where they ultimately were found guilty of defrauding investors on 2 projects. And one was that Winnipeg development. And one of the documents that I saw is they were explicitly saying, like, these funds may be used to repay investors in prior encumbrances. In other words, they're explicitly saying, we're running a Ponzi scheme and we're going to use your funds to repay. So, like, it's not even clear to me that, like, they were ever bailed out by the market. They were able to keep raising more capital.
Yeah.
And just being like, well, if we disclose it as a Ponzi scheme, I guess it's fine.
Well, but this is
and
the thing.
somehow
And there's
regulators
buildings,
were okay
look.
with it.
So,
Yeah.
Somehow the mortgage regulators didn't catch on to this, which is fucking crazy.
Because these are things that kind of come to light as the market goes the wrong way, right? This happens. I think, didn't we have something in the condo market went to shit 2016, 2017, and then this kind of comes out around then. When things are going good, the fraud kind of gets buried under the rug by people. But then when things start to go awry and those investors start going like, hey, I didn't get my money for last month or last quarter, what's going on? And the questions start, and then the market's starting to drop. And then all of a sudden the RCMP is willing to take a look at, what some guy from Twitter says and start to take action, right? Because when everybody's happy, nobody gives a shit that fraud is happening. They all probably have a decent idea that it might be a possibility that they're involved in a fraud, right?
Yeah. Well, what you're describing is a term that in the industry is referred to as the bezel, Bezzle, the bezel. You may have never heard that term, but it was coined by a guy named John Kenneth Galbraith, and he defined it as the quantum of undiscovered fraud that builds up in a frothy market and is revealed when the market turns. It's a similar concept to what Warren Buffett said when he said, like, when the tide goes out, you find out who's swimming naked.
Yeah,
it's the same concept. You're exactly right. A strong market can kind of cover up a lot of bad behavior for a time being. But I would also say that had the market not gotten soft in 2017, it really wouldn't have mattered. The economics were so offside on these investors and these investments that, like, there would have been enormous losses anyways.
Mm-hmm.
It was just never profitable.
And the regulators, like, we have RICO for real estate, but it was Fisco before, but they got like wiped out, and now they've got a new regulator.
They got wiped out because of this.
Yeah.
Just to be really clear.
Yeah. And like
this was such a black
Fisco
eye.
is gone. Yeah.
Yeah, they were gone because of this. So it was such a black eye. And look, I mean, it was so blatantly obvious. And I just did a podcast with a guy named Ron Butler, who was, to his credit, very active, very vocal in trying to warn the head of compliance at Fisco, and to no avail. And I had a similar experience, albeit not with the same sort of connections that he had. So it was easier to ignore me than it would be to a guy like him. But it did raise some questions as to how they could be so negligent on this file. And I would point your listeners, if they want to read a crazy story on this, there's a guy named, I gotta make sure I don't screw this up. It was Matt. See, I'm Googling this as I'm talking to you guys. Yeah, right here. You look up, there's a Reuters article from 2019 from a guy named Matt Scuffham. And It's called Exclusive Canadian Regulator Failed to Make Checks on Risky Mortgage Brokers. And it basically what Matt did
Catchy.
um, is he went through Freedom of Information to get any document related to Fortress from Fisco. And basically, he found that there were these internal documents where these people who were supposedly in compliance hired to bust fraud in the mortgage space. And they're basically like emailing back and forth, being like, holy shit, like if we're not here to shut down guys like this, what are we doing?
Yeah.
So it suggests to me that either there was unbelievable ineptitude at the highest levels of Fisco, or worse. And I'll let you fill in the blanks of what the worst might be.
Yeah.
But this was a goddamn failure of the highest levels at one of our most trusted regulatory entities. And it speaks to just how, unfortunately, how broken the regulatory apparatus is in Canada, that we just can't get serious about white collar crime.
Yeah, and a lot of them in the mortgage space, even though there's a ton of stuff. We'll talk a little bit about our experience with one of the development companies and multi-family rental companies that we discussed on our show. But a lot of the fraud has to do with mortgages, especially out in BC. This is pretty common, but a lot of it has to do with fraudulent types of mortgages, not just on people who are investing in those mortgages, but also people acquiring those mortgages and when they get caught. And so clearly there's a regulator issue. Clearly there's something going on there that they haven't been able to. Ron talks a lot about mortgage fraud and stuff too. So obviously and there's lots of people who've got their speculations on how much fraud there actually is. But nonetheless, we've caught people. We've caught people doing it. And now it's about, okay, well, these criminals, essentially fraudsters, who would normally be raising through like promissory notes and securities and stuff like that, they get around that now by just going to find a corrupt mortgage broker, and it legitimizes everything.
Well, and Ron Butler always says, and I'm sure, I mean, it doesn't take a rocket scientist to figure this out, but he's like, just that one box, right, with the income on it, like that links to the CRA, for God's sakes, like. But this is how deep it goes when the solution is so simple that you could literally wipe out, like, I don't know how much of the fraud by showing the mortgage broker that one box, and that just never seems to happen. I mean, again, you look at it from a certain perspective. Do they really, if that comes to light, right? Like what happens to the market, right? What happens to values and pricing in the market? Nobody really has the vested interest for that reset to happen, right? I mean, except for the first-time home buyers.
Yeah. No, it's a great point. It does raise. I mean, I asked this to Ron when I was on his podcast. I said, like, look, this is such an obvious and simple solution. It's been in place in the U.S. Like we like to kind of ride the Americans for having blown up their own housing market with some pretty crappy underwriting, but they also have some pretty innovative solutions to work around some of the fraud that's emerged since. And one of them is that, for most of the last 20 years, they've had direct income verification so that you cannot falsify your income. And so the question is, like, this is such a simple solution. It's either the regulators view this as such a trivial matter that it's not even worth a modicum of effort, or there's a recognition that, to your point, it's potentially too big a problem, and it's really hard to put those horses back in the barn without affecting resale values of houses. And as we know from this government, they've been pretty explicit that, like, they don't really want to do anything to threaten the equity of homeowners. What I would suggest to you is, if they do bring this in, and I think there will be increasing pressure in coming years to do this, it will represent a credit tightening. It will be significant, and it'll be highly geographically concentrated. People don't want to hear this, right? Because they think that they draw straight lines to racial statements or whatever it might be. But there are regions that would be more vulnerable to a correction were this to occur. And by the way, I want to be really clear. This is not a statement of any race, but what I would say is, if you understand mortgage underwriting in this country, you understand that the moment you go from being self-employed to being a verifiable employee, all of a sudden your minimum down payment drops and your interest rate that you pay drops. So there's tremendous incentive to show that you are no longer self-employed, you are now employed at a verifiable company. And so what that means is, anywhere where you have a prevalence, an overrepresentation of self-employment, there is an enormous incentive to misrepresent the status of your employment. And unfortunately in this country,
right,
well, unfortunately, is not the right word, but we know from the data that new immigrants tend to skew more heavily towards self-employment. They are the entrepreneurs, right? We want them in the country as entrepreneurs, but they're in some ways penalized for being self-employed when they go to get a mortgage. So you understand the incentive structure. So it's not a statement about ethnicity, it's a statement about incentive structures. And any area where you have high prevalence of self-employment, you will find higher prevalence of fraud. It's that simple.
Ben, it's called Under the Table Podcast, so please speak freely, okay? Don't worry. Nothing that
I
you can
seldom
say has
hold
not
back,
been
guys.
said.
I seldom
Okay.
hold back. So
Then
you know,
nothing you want to say has not been said. But yeah, and Uncle Ron's been on the show too, and he wants to always talk about different mortgage products and stuff like that that are out there. But yeah, so when people come here who are high net worth individuals, they want to qualify for mortgages. They probably can support the debt. They're more likely to be connected to a mortgage broker who supported other people in their situation in their communities, and that most of the time they're people who can service this debt. Like it's no big deal. It's very normal for them, and it's not an issue. It's when it crosses into the sector of the economy and society who shouldn't be getting these type of mortgages, right, and who are not financially secure and don't have a lot of equity going into their situation because somebody's trying to make a quick buck,
yeah, I'll push
right?
back a little on that. So here's how I would think about mortgage fraud in this country. You are right in that the document fraud that's happening is by and large people who have every intention of making the mortgage payment. In many cases, can make the mortgage payment. They just don't show the income because they are self-employed and they're financially incentivized to take as little income as possible, and fully legally. Okay. The issue is when you look at, I mean, an interesting way to think about it is like, okay, you got 15% of Canadians' labor force that is self-employed. But if you aggregate the balance sheets of all the non-prime lenders in the country, it's like a couple percent of the mortgage outstanding. Where did the rest of those mortgages go? Right? Like where are all those borrowers? So to me, that's
They own their
one
property,
way
no
to back
mortgage.
into.
Wouldn't that
I
explain
mean,
it?
okay,
The higher
does
net
that
worth
seem like
individuals.
that makes sense
I'm just
to
saying, I'm just
you?
giving
Like
you the
it's
other side of that. The
Oh,
higher net worth
yeah. I mean,
individuals are business people. They
maybe
don't
you
have a
can get a
mortgage.
maybe you can get a couple percentage points. That we're talking like a 13-point delta between what it
Yeah.
should be, right?
Yeah.
So look, we know there's a lot of mortgage fraud happening. Okay, we know that.
Yeah.
We don't have to debate the magnitude. We know
Of
it's out
course.
there. Okay,
Of course.
CBC's done good work on it. Whatever.
Yeah.
Here's the problem. What we know about self-employed individuals is in Canada they tend to be heavily concentrated in highly cyclical industries. A lot of real estate, a lot of construction, renovation, trucking, like a lot of things that are very cyclically sensitive. And so what happens if you look at the US experience, in the US they call them Alt-A mortgages. If you look at the delinquency curves of Alt-A in 08, 09, or even before, for the 20 years prior, what we know about Alt-A loans, so self-employed, is they look like prime mortgages during good times and they look like subprime mortgages during recessions. That's the loss rates on them. And so unfortunately, because they're highly cyclical industries that they're exposed to, when the economy softens, they get hit more than your quote unquote prime borrowers. And that's the risk is banks are disclosing these as prime and they're probably not.
Are you a real estate agent and you're looking to make a change anywhere in Ontario? Guess what? We're hiring. Franklin Associates, #1 team in the GTA for all REMAX teams, #1 team for all teams from all companies for number of units sold throughout Toronto. So if you're looking to make a change, best decision I ever made was to join Franklin Associates. Go to jointeamleo.com and we can set up a call. Which is the reason why there's a higher down payment and higher interest rate requirement, right? Going into those type of mortgages.
If you go with the traditional non-prime lender, right? If you falsify everything, because we're talking about fraud now, so no one's going to put 35% down on a fraudulent loan.
Yeah.
Right. You're doing it explicitly to get the higher leverage and the lower rates.
Yeah. So we that's one. So I'll give you an example. This morning I got a little deck from somebody saying, "Hey, we're looking for some money. Unsecured loans starting at 30,000, secured loans starting at 100,000. We're raising money for this portfolio and all this kind of stuff, right?" But to your point, if it's a fourth mortgage for $30 million after there's already 3 mortgages for the current value of the property, secured or not, it means nothing, right? But these are the type of propositions that people are putting out there that for an unsuspecting investor, they might think like, oh, it's secured. So, that's better, or the return is better than whatever I'm getting. And so we had something, it was called BG Wealth. This was the guys who were up in Owen Sound. If you know about them, they were raising money for the last 10 years.
You're in my backyard now. That's where I am.
Yeah,
All right.
and so you're familiar with them,
I know who you're talking about, of
that
course.
investment group guys. So yeah, so we
Yeah.
had a bunch of their
Just so
victims on the
happens.
show,
Yeah.
to be able to share their story, and along with the lady from the
The
Owen
Herald,
Sound
Owen
Herald.
Sound
Yeah,
Wind or whatever they call it.
they were able to get their website shut down in the Ontario Securities Commission to go in there and have at least the funds stop being raised from innocent people,
Yeah.
because this guy, it was a Ponzi scheme. He's just, eventually the house of cards falls, the market's changed. She's not able to be able to refinance anymore to be able to get the money out. One thing that's really common here, and so Ben, we're not on your level as far as like tackling this, but we're open to it. Anybody who's got a story, we ask for it. We want to bring light to these type of situations because it's easy when we're in the industry, when you understand, hey, this doesn't make sense that this guy's borrowing, especially Darryl and development stuff. This doesn't make sense that this guy's borrowing that much money on that piece of land, or that his projections are this high and that kind of stuff. So you're able to spot the fraud, but the average person can't. And usually, from my experience, I don't know about the Fortress guys, there's like a life of luxury going on in the background every
Oh
single
yeah.
time.
Yeah. Oh yeah. Yeah.
It's
The guy,
never a guy they always think, well, the guy's got he stole millions of dollars and it's just like under his mattress somewhere, and he's about to like go to jail for 5 years, come out and live a good life. No, he spent all the money
Yeah.
on what?
Yeah. So I can speak to that. So, and
Yeah.
first off, let me say, I don't know the story of the BG Wealth guys. I can't speak to that. So I'll take your word, that they were raising funds through some sketchy. I don't know anything about it, so I
No
can't
problem.
comment specifically. But your point is really well taken. There's certain red flags that you would expect to see, and one of them is, you're absolutely right, this kind of life of luxury. That's why, like, there's a couple of knuckleheads that raised all that money through promissory notes and stuff to buy all these rental properties in like fucking Sault Ste. Marie and all these, like, the guys I'm talking about. They raised like half a billion dollars.
There's been a few groups recently that have all
Well, these ones
like,
were big. Then
yeah,
they ended up all over the news. But I remember they're like
yeah,
promotional videos. This idiot, and he's like this child actor, this former child actor
yeah. I
that raised
remember.
all
I
this
remember.
money.
Yeah,
And then the promotional video, it's him like on a yacht. He's like shadow boxing. He's like meeting all these celebrities. It's like, man, if that's the guy you're giving your money to,
yeah.
like, that's not a good look. Like, just as a simple kind of like blanket statement for anyone listening, if you're thinking of investing with someone and they're living a lifestyle like that, you just run away, man.
Yeah. Yeah. Warren
Well,
Buffett, lives that very simple lifestyle. And I think that's helped him over the years because everyone knew the money was going into the right funds. But the guys with the luxury lifestyle, like even Grant Cardone, like, I guess I shouldn't say anything bad, because I'm sure he's a great entertainer. But at the end of the day, his deals, I'm sure there's a lot better deals out there, and that his brand and reputation is what promotes him to be able to raise as much money as he does, you
yeah.
know?
Yeah, I
Well,
don't know anything about him. I can
Right.
tell you the Fortress guys had courtside seats at every Raptors game, flew private jets. I think it was pretty obvious to your
well,
point.
and what's
Yeah.
crazy is that, they're not in jail, right? I
Not
don't
yet.
know. Well, they're not in jail yet, and there's people that were involved in that business that are kind of out there making money within the confines of the business still, and people are, it's
Oh yeah.
you know who I'm talking about, right?
Yeah, shout out. Yeah, absolutely. Well, maybe
Yeah.
we don't.
So,
No,
like,
100%. Like,
how is
it's
this
crazy to
possible?
me. I don't know what the story is there, man. People. I mean, you got guys who were senior at that company who were out there on literally on online forums threatening people with legal action who were raising concerns around Fortress. So now we're talking about like Big Ben Myers, right, who is a senior VP with Fortress,
Yeah.
out there bullying critics, threatening legal action against them.
Yeah.
And that dude somehow
Not a good look.
like walks away and is still out there doing whatever bullshit research he's doing. So fuck
Consulting.
that guy. Fuck that guy. He should like that's bullshit.
That's
and
what
I don't know
I
what the
say.
answer is there.
No, but that's
People
what I
just,
say too. Yeah, fuck
I don't
Ben
know. People have a
Myers.
short memory. I don't know if
Right?
it's 100%.
No, but
I
he's
actually used to. Here's a funny story for
Seems
you
like a
guys.
common sentiment.
So here's a funny story for you guys. I used to say to my wife, because I got so many of these threatening letters from Fortress's bullshit legal team. By the way, as a shout out, fuck you, Jennifer Teskey at Norton Rose.
boom.
You suck. She was the lawyer who ran this kind of like, scorched earth campaign to silence all their critics. So fuck her. And, I used to always know that I'd get a threatening letter from them because Ben Myers would used to like chirp me, kind of like subtweet shit on Twitter and be like, just wait for it. It's coming. There's a smackdown coming. You just like post these kind of random and these statements that were these veiled threats. And I used to say to my wife, oh, shit, I'm going to get another threatening letter from Teskey. And sure enough, like a few days later, knock on the door and, oh, here you go, sir. And it's like, what an asshole, man. Like just, people and it's crazy that guy's still in the industry. It's crazy to me.
People pay him like a lot of money for his reports. People base financing on that fucker's reports. Yeah.
That fucker, just so you know,
Nothing
is out
lasts.
there, like, again, posting online, being like, no, I've vouched, I've researched them. I can vouch for the credibility. They're great guys.
Yeah.
This guy couldn't even see the fraud that was happening, but you're going to trust him with establishing the value of your land. Have fun with that.
Yeah,
There's
your rent
invested
values.
interest. Nothing in business ever lasts when you're dealing with that type of, business strategy. There's not one guy today who's been running a scam for this many years who's still around today for everybody to say your reputation's everything. So you just got to let things go and don't.
And look, by the
don't
way,
sweat the small stuff.
Point, I don't know what Ben Myers knew. Right.
Yeah.
So I'm not alleging that he was, directly involved with the fraud.
Yeah.
I actually, when I spoke to the RCMP, I actually told them, I don't think he's smart enough to figure out this out. And so he's probably going to be there. I'll tell you what I told the RCMP. You guys are going to kick out of this. So I told the RCMP when I spoke with them that Myers is just clueless. So he's going to go down with the ship. But the guy to watch is Frank Margani, who's the other VP. And I kind of said, he's smart enough to know when shit's going down. And when he jumps ship, you're going to know that they're about to run into a wall. And it played out exactly like that. Frank jumped ship first.
Yeah.
The RCMP is like, oh shit, it's going down. And the next thing you know, all the shit went down.
What type of sentences are there? Like what is this just like a fraud? Like is there other type of charges? Did the RCMP share that with you? Like what's the worst case scenario for them criminally?
Well, the worst case is 14 years in prison, but it's got what they've been found guilty of carries a minimum 2 years. And by the way, they have every right to appeal it. I'm sure they will appeal it.
Yeah.
And there is a chance that the appeals court overturns this. So that has to be said. But if not, and I'm pretty optimistic that they're not going to overturn this, they're looking at a minimum 2 years. Now, that raises an interesting question, or I guess an interesting topic, which is just how soft we are in white collar crime. Because I think a reasonable outcome here, what I think is likely, is they're probably going to be given something like 5 years, and they'll serve 18 months, and then they'll be out. And so for
how much will they get to
18
keep?
months,
how much will they get?
9 figures each. I suspect they'll each keep nine. And we're talking about Jawad and Vince, the two founders, not the other senior VPs who left. I don't, whatever. They weren't entitled to any of the ill-gotten gains, but Jawad and Vince, I suspect, are each going to keep 9 figures.
9 figures.
So
but they can order like restitution and stuff. Like they can order them as part of the sentencing to pay back.
No, man, you don't understand how this works. I've got a judgment against them. Yeah. I have a judgment against them for my legal fees.
Yeah.
Right. So once you have a judgment against them, all that gives you is the right to go out and try to find the assets. And if you can find the assets, you can garnish them. Right.
Yeah.
But guess what? You don't have a judgment against the numbered companies. You don't have a judgment on whatever assets they've stashed.
That's civilly though. There are criminal sentencing where you for white collar crimes where they have a penalty of paying back the victims.
Sure.
Right. But so that wasn't part of their sentencing.
Maybe we'll get the sentencing next month. My point is, if they say they're bankrupt, now what are you going to do?
Well, of course put it for example, for example, if somebody does do fraud, right? And I can't give you specific examples, they could still have, bankrupt or not, they could still have that order against them. And so now any money in the future that is made, like Jordan Belfort, I'm using as an example, that's in the US. I don't know about in Canada, how it works.
But
and what
you're
the
right,
differences
it's
are.
in the US.
Yeah, I know.
Different.
I don't know. I'm just saying.
Big difference.
Listen, man, they're never going to make a penny personally. They're never going to make a penny personally. All of their assets are in unrelated, either in their spouse, parents, numbered companies, offshore entities.
Yeah.
So they're never, you'll get a judgment against them. I've got a judgment against them.
Yeah.
I'm never going to see a fucking penny, man. That's not how this works. Now, what's frustrating is if this happened in the US, those guys would be going away for 30 years. And to your point, the feds will go around and say, oh, that house is in your parents' name? How did they pay for it?
Yeah.
Oh, they have no income, but they're living in a $20 million house? We'll take that.
Yeah.
And they will go around and they will do exactly what you're suggesting.
So
And this is part of what's so frustrating to me is we are so goddamn soft on white collar crime in this country.
Yeah. And so from a risk kind of analysis perspective, if you're looking at maybe 5 years, 9 figures, maybe
5 years.
well, but so maybe it's worth doing, for God's sakes, for a lot of people, right? And
yeah,
let's just remember that we're talking about one that got caught. Okay. Like, hello, how many of these things are really
Ben
going
doesn't
on?
have enough time to take down everybody,
No, but not everybody's suing Ben over a tweet either.
Yeah.
Right.
Yeah. Don't sue Ben over a tweet if you want to keep going on. There's a story, Ben, we shared on the show a couple weeks ago in BC where a Chinese investor gave another guy $112 million in order to invest. And he said he was going to get him a 50% return. After he spent the money, bought mansions and stuff like that in mainland BC for his family and put them all on his kids' names and everything else like that. The guy went back to China. And of course, they're saying, hey, give me back my money. You haven't returned the money. So the Canadian resident flew back to China, killed the guy. Chinese authorities arrested him. He's going to jail for that. And now here in Canada, the family of the deceased is saying, hey, all those properties are in these other people's names, but the money came from my father's investments, and that should be, sold and belonging to us. And so I guess we'll find out what happens, how
That's
Canadian
a tough sell in
authorities.
Canada.
Yeah.
Yeah, that's a tough sell. It's hard to get them to execute on that in Canada.
Yeah. So I don't know the difference between the US and Canada, but those stories, like Darryl's point, like it's like infinite amount, and most of them it's a house of cards that just hasn't fallen yet.
Well, it depends where they start in the cycle. So this is a great segue, actually, because this is what Ben does. Where are we in the goddamn cycle right now from your perspective? Like, haven't we been talking like we've been in a recession for like 4 years now? Like, where are we in this thing? Is there light at the end of a tunnel at some point? Are we like, where are we?
Yeah, it's a great question. It depends on what segment you're talking about. I look from a high level. I was actually just looking at these numbers this morning. I was just running the numbers. We've got a lot of big metros in Southern Ontario where on an inflation adjusted basis, we're down almost 40% from the peak, 40, after accounting for inflation.
Hold on,
well,
on GDP?
A lot of big Southern Ontario's and metros, really? Kitchener to London. Toronto's not far off because you got to remember a lot of these places are already down 25, 26, 27% from peak. You've had 12, 13% inflation since peak, right? So on a real basis, you're down almost 40%.
This is housing prices. Sorry, Ben?
I'm talking house prices.
Okay.
Yeah. And so we're talking so my point is, everyone wants to get bared up after the major correction has already happened. And to me, I'm kind of like, I don't know, how much further is it going to go? Like,
right.
I think it's much more likely that we start grinding sideways from here. I don't think there's another 20% down from here. But, I think you got to get really specific about segments. So condo market, you're going to have downward price pressure for probably at least another year. And it's going to be a grind. It'll be a phenomenal opportunity to own condos in the 2030s. There's going to be a rip-roaring bull market in condos in the 2030s because we'll be dramatically undersupplied. But between now and then, the direction is going to be down.
Well, but hold on a second. What gets that? You said for a year. What happens in the year?
Maybe more.
Okay, yeah.
Maybe more. Well, look, you've got another year of record completions coming up. You've still got a lot of people who are way offside on their rents.
Yeah.
It's hard to get bulled up on condos over the next year. It could be a 2-year grind, maybe a 3-year grind. My point is just that like we know where condo starts are going because you can see it in the pre-construction sales, which are down 95%, right? So we've over the last 12 months in Toronto, as an example, there have been only about 2,800 new condos sold. So that's a pretty good approximation for what your condo starts are going to look like in 12 to 18 months.
Yeah.
And kind of 4 years after that, that's a pretty good approximation of what your completions are going to be. Now, even in your most bearish demand scenario, there's still going to be a lot more demand for condos than 3,000 in a year. So we will be very undersupplied. And the problem with condos is by the time you realize that you're in an undersupplied market, you still have 5 years or more before that new inventory comes online.
Yeah. And
so condo bull markets are crazy, right?
Sure.
So
what about change in population and stuff like that? Are you concerned right now that we're starting to see that?
Okay, so this gets into the other two parts. So rentals, you're going to go through a couple of years where rents are going to be pretty soft. I think from here, vacancy rates in most big metros are still going to double. Okay, and that's because we still have people are sleeping on how much rental supply is coming. the equivalent of almost 7% of the existing rental stock nationally, primary rental stock. So in other words, over the next couple of years, as what is in the construction pipeline currently, as that completes, the number of purpose-built rentals in the country will expand by 7% into an environment where the feds are trying to dramatically tighten up on temporary residents, right? Like international students, temporary workers, which were the major source of rental demand, incremental rental demand over
Big
the
time.
last few years.
Yeah.
So you're going to have 7% growth in the rental stock into an environment of probably like pretty close to zero net rental growth, rental demand, I should say. So you can see where that's going to go. So it's going to be a soft couple years for rents. Single family is a little trickier. I can see a scenario where single family starts to improve next year because completions, if you look at you look at building permits, they fall into levels we haven't seen in 40 years across the country, but particularly in Ontario and BC. So developers have stopped building single family. I have a view that sales are actually probably bottomed in the first quarter, which is not a very consensus view, but I think I feel pretty confident in that view that we probably hit a low kind of in March. And you'll see a slow grind upwards. It's not going to explode higher, but we've seen the lows for sales. And so if I'm right, come 2026, you'll start to see a slight increase in sales, slight reduction in new supply. The market's going to start to tighten a little bit at the margins, and you are probably going to see a floor in single family pricing pretty soon. I suspect. I could be totally wrong. The big unknown is how bad any potential Canadian recession could be. And if the wheels come off the economy, like who the hell knows? But assuming that what we have right now is kind of the status quo, that's to me is a reasonable roadmap for kind of how to think about things from here.
So we've never been in a recession though over the last 4 years, right? Like, isn't that fucked up? How is that possible? How do you go through 40% corrections and all these people not being able to be employed, or, the local employed are no longer employable, and you got this new breed of employees? Like, how does that all happen? Wow. Do you know what I'm saying? Like, how is it possible?
Population was a big support on that. So
yeah, well, population won't be a big support going forward. Like this is something I was very early on in saying that, anytime you have an explosion in population like we've had in the last few years, it's always followed by a very weak period for population growth. And we're going to get that. And in fact, I think we're probably going to have 2 years where population growth is effectively zero in the country.
But will we hit a recession? Will there be a recession though? Like,
I think it's pretty likely we get a recession. I think so, but I don't think. Here's my take on the recession. It's, if you look at the Bank of Canada's modeling, and I think it's probably the best modeling I've seen on this, is that if we get a 10% base tariff, we assume that we're going to still get a tariff from the U.S. in some form.
Oh yeah, tariffs.
Well, what we have right now is a non-issue. Okay, if all that we get right now is the extent of the tariffs, like we're going to get probably 1 quarter of soft to slightly negative GDP, which is the quarter we're in right now, and it'll bounce back. But if we get a base tariff, you're probably going to get more like 4 or 5 quarters of declining GDP, which will be a recession. And you're probably looking somewhere on the order of 1.5% or 2% cumulative decline in GDP, which is, for reference, is about half as bad as what we saw during the financial crisis. Okay, so not a fun period of time. There will definitely be job losses. But the point that I would make is if you look at home sales, and I'll look at Ontario in specific, home sales in Ontario, when you adjust for the population, are the lowest they've been in 40 years. They're way lower today than they were in the depths of the financial crisis. So I guess my question to you would be, let's assume we get a recession. How bad a recession does it have to be to push home sales further down when they're already at enormously bad recessionary levels? That is my question. I don't think they're getting worse, even in a modest recession.
I don't think home sales are, because I think people who are buying are always, they're more stable, right? So I don't think we're going to add more buyers. The issue is just how many more sellers are we going to add?
That's 100% agree. That is 100% the big question to ask.
Yeah.
What I would say though, my view on listings. So if you look at, so I've got this chart that just looks at new listings on a 12-month rolling basis. And one of the things that we saw in like 22 and 23, interest rates went up, the housing market softened, new listings evaporated. Nobody was listing into that market. And instead what you saw is an enormous inflow of those same units into the rental market. Okay. So you went through a period of over 2 years where new listings were unbelievably like 30-year lows. Okay. So anytime you have new listings that far below normal, you're going to have a snapback where there's a natural equilibrium for the flow of supply. And so now we've come through really a year and a half where new listings are quite high. You probably have another 6 months of that. But by the end of this year, you'll have kind of
Absorbed.
repaid that. Yeah,
Yeah.
and we're going to go back to a more normal level of new listings. And I think that's going to also coincide with a reduction in new completions in the new construction market. So I still think, man, if I was a betting man, I would say the single family market maybe starts to look a little better come kind of next year at this time.
Well, it definitely has been a really tough time this year. Like I've never seen so little activity on properties. The amount of buyers that are out there is just so dismal. They have so many choices, so they're only going to look at the right home that makes sense for them if it's the right price or it's on the right lot or in the right building with the right view. And it's difficult. It's challenging. It's hard to guide your clients and tell them and say, what do you do? Because a lot of them have needs. A lot of the people I'm dealing with right
Yeah.
now, they need to sell. They're not like, we're not just testing the market.
Yeah.
Like we're like, we have a timeline. And if we don't sell by a certain timeline, things are going to be, in trouble. I've never dealt with so many of these type
Can
of
I ask
people in
that?
the
Like, what's
last year.
driving? That's a really interesting statement. So
Statement
what
of
are you
claims from the
finding?
lender. Those
Oh
are
shit,
pretty
really? Eh?
popular right now. Oh yeah. So a lot of the people we sell are pre-power sale. It's on the way to power sale, and we try to offer them solutions to be able to help pay off their debts. Other people, they got an interest rate. One guy's got a renewal coming up next month. He's with a B lender. His rate goes from 6 to 9%. He's already negative cash flow 2 grand. He's going to be negative cash flowing 5 grand. He doesn't have the money. We got to
Oh
lend
my
him money just to
God.
make those payments. So he's like, "What do I do?"
Wow.
Right? And we're getting no
And
showings.
would you say that is like, is that considerably different, that trend that you're seeing than say 6 or 12 months ago?
Yes,
Oh yeah.
Okay,
considerably
see, that
worse.
gives me pause. When I hear
Yep.
stuff like that, that gives me
Yep.
pause. And like,
Yep.
look, I'm humble enough to know I get a lot of calls wrong. So I don't, I have a roadmap for how I think this is going to play out. But I'll be honest, when I hear you say something like that, that makes me a little nervous.
Yeah.
So,
We have a
Well,
we have
but
a
what's causing that specifically? Why now? Why not? Why was that not an issue 6 months ago or 12 months ago? Because rates were higher 12 months ago.
Yeah. So most of these people, they had these issues. They're pre-existing, but they've burned through their credits. They burned through their line of credits. They burned through their savings. They've rented out a room. They've gone through that. So they were already at this point
The
12 to
rates
18 months
doubled.
ago,
The rates
right?
doubled since they bought it too, probably, right?
But
Yeah, but
most of,
not from a year ago. Like they would
yeah,
have been at the highs almost 2 years ago.
the problem started 2 years ago, and they were weathering the storm. So they started coming up with all these solutions in order to be able to try to solve their problem. They refinanced 2 years ago to take out that last bit of equity, suck it out in order to be able to, hope that the market got better a year or two later. And so now they got no lenders that are going to serve them whatsoever. The loan to values are already off. The second lenders, I had lenders knocking the first day they missed the payment. The next day they're starting to knock on the door saying, "You missed your payment yesterday." Private lenders, because that's how concerned they are about the equity left in the home. And we're selling them like, either the statement of claims been issued or they've already had their letters from the lender's lawyer issued to them saying, that you've missed one payment. The first position lenders usually have the payment made by the second position lender. So the first position lender's not doing anything because he's getting his money no matter what. So now the second position lender's on high alert because they've already got another 20 clients like these right now. So they're trying to make sure that that they get their money, and they're acting fast. There's no more like, "Hey, we'll wait and give you some time." They don't care about your story, and they demand the entire amount right away. They don't say you're behind 3 grand. They
Because
say
they're
you owe us
trying to,
$230,000. We want everything right
yeah,
now.
they're trying to avoid like a windfall of people that are coming at them, right? Because it's like
They're
a
trying to,
levee's about to break. I'm telling you.
and when they take over and the market continues to go down the way it is, they're left with nothing, and they don't want to lose money. So they're
People are
trying to.
waiting for like their condos that they've used the line of credit for to close in a couple of months. Like there's all kinds of shenanigans that still haven't played themselves out. And like from the boardrooms I'm in with guys that own the properties that are frozen for like 2 years of not even launching yet. Like you're gonna start to see the patient money become a little less patient because 1 year condos, I don't know what starts the absorption going as more shit's coming on the
Yeah.
market, nothing, right? And all these idiots are listing at the same time. Like it's gonna be a little while, I think, before the condo market cleans
Well,
itself up and and we haven't seen failures yet. Like we've seen some. I think there's some pretty good failures that still have to come down the pipe.
totally agree. Totally
Yeah.
agree.
You
But
mean the
what you're
building?
talking about, Darryl, is you're talking about the development space, which I agree with you is going to be a disaster for a while. But would you also agree that, what's being described in the resale market, this kind of emerging stress that wasn't there 6, 12 months ago? Like, are you seeing that as well? Are you hearing that?
I mean, I hear it because I deal with TK. I'm not so involved in that part of the market. I mean, I'm not
Gotcha.
involved at all,
Gotcha.
other than through just
Yeah.
hearing stories from realtors I know. But it seems like there's a lot more pressure on a lot more people because there seems to be this segment of entrepreneurs that got their equity in their house, and like there's a lot of businesses under a lot of pressure right now, right? And they still
Yeah.
haven't
Oh,
even
for sure. That's true.
and
Yeah.
they need a way out, or they need to get to that equity, and there's just a whole bunch of clusterfucks going on. And then you
Yeah.
hear
Okay. You
stuff.
guys got me way more bearish for sure. That's interesting to hear you say that it's noticeably worse than it was even a few months ago. That's really interesting to me.
I just keep thinking, like, where is the real trouble? Because I feel like we haven't seen anything so major yet. Like, we've seen a few things that were okay, but like we didn't, right? And so we're already, you're saying 40% down, I guess, in real terms. I
In
don't know
real
what that,
terms, yeah.
yeah, which is, yeah, I mean, who the hell knows what the fuck real terms even is anymore? Because I mean, these stats they give us are, well, I don't know. They're unreliable, I think, at best, right? But we need something to work
Ben
on.
lives in stats, Daryl.
Oh, but I know
Okay,
that was one of
you
my
just got to
Well,
know
questions.
how to
don't worry
read
about
them.
real.
That was one of
Like,
my
just look at
questions for
nominal
Ben.
prices. Like,
Right.
you've got a lot of big metros that are down 20, 25% in nominal terms from
Yeah.
peak.
And,
Like,
and but
that's already a historic downturn, man.
well, and so I mean, the solace I find in that number is that a lot of it is in the Bancrofts and in the Durhams and in the
I
undesirable
know.
places that went bananas during COVID, like the giant corrections, right? But like if you start adding real terms, then like no matter what, everything's fucked up for sure.
Yeah, I don't, man. Okay, so look, I'll just tell you, Korea disagrees with you. So their house price index,
Uh-oh.
if you just go, you can verify this data. Go to Korea Stats or their HPI
Yeah.
tool. Download the data, their house price index. If you index it back to kind of call it February 2022, and you look at the percentage change, well, here, you know what? I'll pull up the data while we're talking because
Yeah.
I was actually just crunching this today. So I'll tell
This is
you,
nominal. This is nominal
this is
numbers.
Yeah,
nominal declines.
nationally has its issues because of the um, stability you've got in other markets. Because ultimately, inflation, right? The value of the dollar has gone down, and so when people are buying in these smaller, more emerging markets, whether it be New Brunswick or even Montreal and all these type of places, they're going to have a little bit less of an impact overall. Because at the end of the day, the
Yeah.
reasons that a lot of those places went up, yeah, there's some population growth, yeah, there's some undersupply and all that kind of stuff, but ultimately it was just like the value of the dollar was going down. You got less for your money. You had to pay a little bit more for houses. But I think there's across nationally, the house price index, I don't think is as indicative of what's going on in the markets as you would see in Vancouver, Toronto, like
Yep.
Southern
Well, let
Ontario,
me
like
give you guys the numbers. Let me give you
yeah,
guys the numbers. I'm looking
yeah,
at them
yeah,
right now.
yeah.
So
Okay.
it's just to be clear, it's not just the smaller suburbs. You're right. The ring kind of around the big metros that kind of benefited from that work from home exodus in 2020 boomed a lot and has
Yeah.
pulled back.
Yeah.
But it's not just the little metros, man. So nationally, you're talking. So I'm looking at the numbers right now. The change from February 2022 minus 17.5% nominally. Nationally,
National. Wow.
Yeah.
Vancouver's only down 6, but you get into Southern Ontario, Hamilton down 26.5, Kitchener down 26, London down 24, Ottawa's down 8.6, Toronto down 21.8.
Wow.
These are massive, and this is before you roll in the impact of inflation. So, getting back to the point we discussed a minute ago, the people who are getting really bearish now, like I just don't know. I don't know how, like, I don't know that we're going to be here and you're going to get another 20% down. It's possible, man. I've been around long enough to know that the prediction business is hard business, but I don't know you're going to get another 20% down from here.
I fucking hope not, but I'd be interested. So I've noticed something over my experience, and I have nothing to quantify this, and maybe you'll have time, maybe you won't. I don't know that it matters, but I find that when there's a lot of giant swaths of land, like when you drive up and down the 400 or the 404 or like go across the 401 and you see those big 143 acre parcels for sale and 257 acres and 52 acres, when those start piling up, I'd be interested to see like what happens from that kind of a peak in the market, because right now I feel like everywhere I turn, there's giant parcels for sale. And I feel like
Yep.
that's an indicator of, uh-oh, the smart guys know something about something right now. And
Yeah.
I don't know if I'm
Well,
right.
They're
I
subject to
talked
the
to
same.
Jeremiah Shamus. Like, you guys, I'm sure you guys
Yeah.
know Jer. He's great. I mean, he'll tell you straight up. Any sort of development land in Toronto across the GTA, you're down 40 to 60% from peak
Yeah.
in the development component, which totally computes. I believe that completely.
Yeah, it's scary. A lot of guys are buying land, getting it zoned, getting it appraised at less than they paid for the land.
Yeah.
How do you make that?
You got one exit strategy from there.
Well,
So,
but some of those turn into
purpose-built
Ponzi
rental,
schemes,
raise the equity, or start another Ponzi scheme.
That's how it
Scheme.
starts.
Raise the money,
Uh-oh.
and that'll solve all your issues.
That's right.
Yeah.
Well, we're at 3:00,
Yeah.
Ben. We appreciate your time. We know you got things on the go. Shameless plug for people to find you. Where's the best place for people to follow you?
Sure. Well, I mean, you could follow my random musings on X at Ben Rabity, but be prepared to be offended because I don't really have much of a filter and I say what's on my mind. If you're in the real estate space and you want some analysis, edgeanalytics.ca, you can sign up you try it for free for a month. You get cool marketing infographics, really great reports, including deep dives at the big metros across the country and what's happening there. And that's a great way to find it. Yeah, check it out.
Awesome. We'll put a link for that in the bottom. And we appreciate you coming on the show for the first time. And hopefully we can check in next year again with you and just to see how this ages, all the information that we got going on today. So that'd be great.
Appreciate it. Okay, that's great, guys. Thanks a lot. Oh.
Do you have anybody else you would like to tell to fuck off before we go?
No, man, I think you got my bases covered.
There we go. All right, I'm glad you got that one.
We'll clip that and make sure it gets out there.
Beautiful. All right, thanks, guys.
Thanks,
have a
Ben.
good one.
Thanks,
yeah,
Ben.
take care.
Okay, see you. Do we want to do a little recap, or are we good? Are we done? Please sub to the channel. Have a nice day. Thanks for being here.
Okay.
All right. Have a nice day.
Thanks for being here.
Thanks for being here. That was good.
Was that it?
I don't know. I mean, we can be.
It's
pretty good. Pretty good ending.
That was good. That was a good episode. Good job. Good guest.
Well done,
Good
everybody
guest.
involved. Thank you.
This shit is taking 5 years.